The build-up to the SEC's Bitcoin approval has been highly controversial. Much has been said and done in the crypto industry, which has led to some fast-rising myths about Spot Bitcoin ETFs. Welcome back to the channel. In this video, we will demystify Bitcoin ETFs by explaining the crypto crash and why they are lying to you about it. So early this year, the probability the SEC would approve Bitcoin ETFs for trading was around 80%, with much of the uncertainty being about which company would falter in the race to get their ETF application approved. But with everyone jumping on the hype train, Bitcoin's bull run faltered, dipping 9% to erase most of its recent gains, which has unsurprisingly led to many theories. The biggest reason Bitcoin slumped was because $400 million was liquidated within 2 hours. Sure, this had to do with the Spot Bitcoin ETF approval, but not in the way people keep making it out to be. You see, financial service company Matrixport put out a report that the SEC will reject all ETF applications. But the truth is, the report was based on their view of the politicking in the United States and not on the actual usefulness of Bitcoin ETFs. According to Matrixport, Democrats in the US are not the biggest supporters of crypto, and there was no political advantage to approving any of the Bitcoin ETF applications, even if the companies applying met the SEC's strict requirements. All these, of course, we know aren't true, since 11 Spot Bitcoin ETFs have already been approved and are available to trade. With all these in mind, let's move on to why Spot Bitcoin ETFs cannot cause a crypto crash, no matter how they spin the narrative. ETFs, over time, have had a rich history of improving any market they enter. Bitcoin ETF is an investment fund that anyone can trade without owning BTC as a cryptocurrency. The public can simply check their preferred brokerage platforms and see if they're offering up ETFs in the crypto niche to buy. The advantage of having a Bitcoin ETF is vast. Bitcoin performance drives the price of Bitcoin ETF shares, so the two are always in sync. In other words, people can actively buy and sell their shares, which simultaneously improves supply and demand volume. Also, every company that submitted an ETF application has had to meet strict rules and regulations that they didn't have to meet if there was no confidence in the long-term success and viability of Bitcoin ETFs. One of the reasons behind Matrixport's report that caused the flash Bitcoin crash in January, for instance, was that the financial service company found out all the applying companies had surveillance sharing agreements with Coinbase, and that this was a breach of SEC's requirements. However, the company apparently forgot the DC Circuit Court of Appeals already made the requirement obsolete. Then there's the popular microconception about Bitcoin ETFs being uncharted territory. However, this is also a lie. There are currently 8 countries that trade Spot Bitcoin ETFs. Of these 8 countries, Canada leads the pack for investments in Bitcoin ETFs, with about $2.79 billion already invested. However, many people are simply looking at the fact that Canada's ETF hasn't had the anticipated flow experts had projected before the launch in Canada. In any case, the flash crash leading to the SEC approval was only a stop hunt before ETF trading became a thing. And there's proof this is a correct assumption. When the first gold ETF was listed on the NYSE back in 2004, the market experienced a dump just like the one Bitcoin had. And then there was a massive bull run. Also, gold ETF for the next 5 years became a good platform for the market to build. Now, which crypto would you watch out for even as the Bitcoin ETFs start gaining ground? Well, DePIN in Web3 is one you don't want to overlook. DePIN, short for Decentralized Physical Infrastructure Networks, lets clients use cryptocurrency tokens to build, maintain, and operate real-life infrastructures. So this could be a charging station where a community of people will come together to invest in using crypto tokens to further improve the value of their ecosystem. Messari has also projected that DePIN will have over 3.5 trillion market opportunities by 2028. So there you have it. Spot Bitcoin ETFs is the next big thing to happen to the market. Let us know in the comments section what you think of Bitcoin ETF. And also, subscribe to the channel if you haven't already, with notifications, so you don't miss our next upload.